Today, we're going to talk about Bitcoin. But look, this isn't just some dry explainer on technology or finance. At its absolute core, this is a story about rebellion. It was born out of a moment when the entire world's faith in the traditional system just shattered. And it all kicks off with one single jaw-dropping number. Our story starts back in 2008 with a number that's so big it's almost meaningless. $700 billion. That was the size of the bailout for the very same banks that had just driven the global economy off a cliff. Think about that. Millions of regular people were losing their homes, their jobs, their savings, and the system was getting rescued with their money. The trust was just gone. And that bailout, it really just summed up how everybody was feeling. This quote right here, it nails the mood perfectly. This deep, burning sense of betrayal. The feeling that the whole game was rigged. The idea that ordinary people were footing the bill for the recklessness of the powerful. The world was angry, and it was in that exact moment of frustration that a really radical idea started to grow. So yeah, out of all that chaos and anger, a rebellion was born. But this wasn't a rebellion fought in the streets with signs and protests. No. This was a rebellion fought with cryptography, with mathematics, and with code. A brand new financial system was put on the table, one that was designed to work without the very banks and governments that people felt had failed them so spectacularly. And this all happened incredibly fast. Just look at this timeline. Right in the middle of the 2008 implosion, this anonymous person, or maybe a group, we still don't know, using the name Satoshi Nakamoto, drops a white paper online. The idea was simple, but totally revolutionary. It basically asked, what if we could have money, but with no banks? Just a few months later, bam, January 3rd, 2009, the very first block of the Bitcoin network, the Genesis block, is created. And get this, hidden inside its code was a headline from that day's newspaper about, you guessed it, another bank bailout. This wasn't just tech, this was a statement. For a while, Bitcoin was just this fascinating little experiment for a small group of computer scientists and cryptographers. Its first real-world use wasn't some big Wall Street trade. Nope, it was a guy on an internet forum offering 10,000 Bitcoin to anyone who would order him 2 pizzas. At the time, those coins were worth basically nothing. Today, those 2 pizzas would be worth hundreds of millions of dollars. It's just wild. It really shows you how far this whole thing has come, from a funny little experiment to a global asset. And it all started with takeout. Okay, so we've gone from a revolutionary idea to paying for pizza. But how? How does this thing actually work? What stops people from just, making counterfeit copies or double spending it? Well, the answer is in its core technology, the weapon of this whole rebellion, something called the blockchain. The easiest way to wrap your head around the blockchain is to think of it like a shared digital notebook. But imagine this notebook is copied and spread across thousands, maybe tens of thousands of computers all over the planet. Every single time a Bitcoin transaction happens, a new line gets added to every single copy of that notebook. That means there's no single person in charge, no master copy. Everybody has one, and they all have to match perfectly. This is how you get a system where you don't have to trust a bank, because the network itself is the guardian. So, what would happen if someone tried to cheat? It's a fair question, right? Well, let's say you tried to edit a transaction in your copy of the notebook to say you have more money than you do. The instant you do that, your copy no longer matches the thousands of others on the network. The whole system, through this automated process, immediately spots the difference. It compares your fake page to everyone else's honest page and just reject your change. It's like trying to lie to a stadium full of people who all have a perfect video recording of what really happened. You'd get called out in a second. Okay, but who gets to add the next page of transactions to this global notebook? Well, this is where miners and something called proof of work come in. You can think of it as this giant, continuous, global math competition. Computers all over the world, these miners, are all racing to solve a really, really hard cryptographic puzzle. The first one to crack it wins the right to add the next block of transactions, the next page in the notebook, to the chain. And for all their hard work and the energy they spent, they get rewarded with some brand new Bitcoin. So this process, it does 2 things at once. It secures the whole network, and it's how new coins are actually born.
And this brings us to the core economic idea behind Bitcoin. See, it wasn't just designed to be a new way to pay for stuff. It was designed to be a new kind of money, full stop. Its rules are a direct shot, a direct challenge to the way our modern government-issued or fiat currencies are run.
Unlike traditional money, which, can be printed whenever a central bank feels like it, Bitcoin's supply is strictly controlled by its code. A huge part of this is a process called the halving. Roughly every 4 years, the reward that miners get for adding a new block gets cut in half. You can see it right here on the timeline. It started at 50 Bitcoin per block, then it dropped to 25, then 12.5, and so on. This means the pace at which new Bitcoin is created slows down over time in a perfectly predictable way. And this will keep happening until the very last fraction of a Bitcoin is mined, sometime way out in the year 2140.
In this slide, this right here really gets to the core of it all. It's a clash of two totally different philosophies of money. With Bitcoin, you have a hard, unchangeable cap of 21 million coins. That's it. No more can ever be created. Its supply schedule is written in stone, well, in code, for everyone to see. Now compare that to something like the US dollar. There's no cap. Central banks can and do create more money out of thin air based on policy decisions that can frankly change on a dime. Predictable versus unpredictable.
This chart just gives you a stunning picture of that difference in the real world. Between 2020 and 2022, largely in response to the pandemic, the supply of US dollars increased by an absolutely insane 40%. Let that sink in. Nearly half of all dollars in existence were created in just 2 years. Now, during that exact same time, Bitcoin's own inflation rate, the rate of new supply, was chugging along at around 1.8%, and it's programmed to keep going down. This huge contrast is exactly why you hear people call Bitcoin hard money in a world of what they see as easy money. Now, as you can probably imagine, this radical new take on money has kicked off a fierce debate. The battle over Bitcoin's future, its whole reason for being. It's being fought every single day, not just in some corner of the internet, but in the biggest boardrooms and on the biggest news channels in the world. And the two sides, they could not be farther apart. So on one side, you have the believers. You've got guys like Michael Saylor, a CEO who's literally borrowed billions of dollars to stack Bitcoin for his company. He calls it digital property, the best asset you can own in a world where currencies are losing value. You've got tech visionaries like Jack Dorsey, the founder of Twitter, who thinks it's destined to be the internet's own native currency. But it's not just theory. It's being used on the ground right now as a lifeline in countries with crazy high inflation or government restrictions, like in Nigeria and Argentina, letting people actually protect their savings. And then you have the critics, and they are just as passionate. Here you've got a quote from Warren Buffett, who is arguably one of the most respected investors of all time. His take is, well, it's blunt. To him, Bitcoin has zero intrinsic value. It doesn't make anything, it doesn't pay a dividend, and so buying it is just pure gambling. Or, as he so poetically puts it, it's like trading turds. And here's another giant from the world of traditional finance. Jamie Dimon, the CEO of JP Morgan Chase. He's called Bitcoin all sorts of things, but one of his famous lines is that it's a pet rock. And this analogy gets at the exact same criticism, the idea that Bitcoin's value only comes from the hope that some other person will pay you more for it later. Not because it does anything, but just because it's a collectible, like a rock. So you can see both sides are looking at the exact same thing, but they're judging it with completely different rulers. The believers, they value its digital scarcity, its unstoppable nature, and its power as a hedge against inflation. They see a new asset class, like digital gold. The critics, they're judging it like a stock. They see that it doesn't generate cash flow. They see the crazy volatility and the uncertain regulations, and they call it a fatal flaw. It's like they're speaking two different languages. And that brings us to the final and maybe most important question. Forget the war of words for a second. What are the real, actual threats that could completely derail this whole rebellion? Can Bitcoin survive the major tests that are definitely coming its way? Well, there are a few huge existential questions hanging over Bitcoin's head. First, there's the ghost in the machine, its creator, Satoshi Nakamoto, who's thought to have about 1 million Bitcoins that have never, ever moved. What if they come back and sell? Then you have the government threat. What if all the major world powers get together and decide to ban it? There's the far-out tech threat of quantum computing, which could someday theoretically break its encryption. And of course, there's good old-fashioned competition. Will a newer, shinier, faster crypto come along and make Bitcoin obsolete? Let's just take that government threat for a second. Bitcoin's main defense mechanism is its decentralization. There's no headquarters to raid, no CEO to arrest, no central server to unplug. And we actually saw this play out in real life when China, which used to be the absolute center of the Bitcoin mining world, issued a total ban. And what happened? The network didn't even blink. The miners just packed up their computers and moved to other countries. The network itself barely noticed. That adaptability is absolutely key to its survival. And as for that threat of competition, it's really important to understand what Bitcoin is trying to be. It is not trying to be the fastest or have the most bells and whistles. It's built to prioritize security and reliability over everything else. Its code changes really slowly, very carefully. What some people see as being slow and boring, that's not a bug, that's a feature. It's designed to be a super stable, predictable, and incredibly secure foundation. It's built to last, not to be trendy. And that leaves us with this one last question to chew on. After all the hype, all the criticism, the epic market crashes, and the threats from governments, Bitcoin is still here. For more than a decade, it has survived every single thing that's been thrown at it. So maybe its most revolutionary feature, its true superpower, isn't how fast it is or whether you can buy a coffee with it. Maybe in a world that's constantly changing, its most valuable quality is just its relentless, decentralized, and proven ability to survive. What do you think?